Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
We've seen a lot of sideways movement for the benchmark index, and in fact, today will be interesting from the perspective of the Bank Nifty expiry, and we'll get Agam on in just a bit to talk about that. But you were looking at the close of market very closely yesterday, and there was quite a bit of selling in the Bank Nifty towards the end of the session.
Absolutely. In the last hour of trade, or probably in the last 30 minutes of trade, is when we saw the selling that actually intensified as well in terms of Bank Nifty. It's interesting to see, how we are now below the 20,000 mark. We ended at 19,665, and as Agam was pointing out, 20,000 is far-fetched overall, at least from what the numbers are pointing out. Clearly, if you go to see a 0.3% lower is what Bank Nifty ended at. It's interesting from a tech perspective as well, because if you see the technology counters, US markets are seeing a sell-off in terms of technology stocks, and that is having some bit of a rub-off effect on India as well.
No, certainly. And you saw the equity markets in the US lose, all three benchmarks, in fact, losing over 1% each. And that rub-off has already been seen in the Asia-Pacific region so far. But let's go back to Agam, because I think today and tomorrow will be very key from the perspective of the end of the series and the cues heading into the next one. Agam, good morning. Today, Bank Nifty expiry. What can we look at?
Right. Good morning, Alex. So I want to point out to all our viewers not to make the mistake assuming that today is the Bank Nifty expiry. Why? Because this is the monthly expiry. On the monthly expiries, both the Bank Nifty and the Nifty expire on the same day.
Right?
Thursday.
Okay, my bad.
So, well, for all the traders out there, that's the first thing that they do have to bear in mind. Well, don't blame yourself, because this is the first time something like this is going to happen in Indian markets. That said, how are things panning out for our markets and as far as F&O space is concerned? Coming down to the Nifty futures, where we are looking at a little more addition, but naturally rollovers have picked up and it's currently standing at around 48%. What about Bank Nifty? Well, once again, this is where we're actually looking at further unwinding, and across series we've seen shedding around 3.7%. Bank Nifty futures rollovers at around 48% once again, not unlike the Nifty. In terms of the Nifty, what levels are we watching out for? There's been more and more writing around the 19,800 mark. That's where we are looking at maximum open interest. And on the lower end, we've seen a slight shift of max OI from 19,500 to 19,600. That said, in terms of the most active options, naturally a little more along the lines of 19,700 call and the 19,650 put. So a little more consolidation happening, as Hiral suggested earlier. And, coming down to the Bank Nifty too, the range that we're keeping an eye on is the 500-point range with 45,000 being a very, very firm, sort of resistance, if you want to call it. That will be the pinstrike everyone will be watching out for, in fact, and that will also be the pivot going forward. Of course, on the lower end, watching out for 44,500. But on the whole, largely, we're expecting further consolidation, at least over the next couple of sessions.
Absolutely. This consolidation is something which really tests the patience of investors as well. Thanks, Agam, for getting us the details. So that's the overall market picture. But the next thing that we're looking out for is the way crude has been panning out, right? $94 per barrel is what we've already seen. Now, the impact in terms of various sectors is going to be interesting, because obviously you don't see the immediate impact in terms of financials. It does come down over the next quarter or something. Mika, exactly. So Mika is here to give us more in terms of what's the direct correlation, what are the various sectors and companies that could see the impact.
Good morning. So Brent crude prices have been on a rise. Now they currently trade at $94.4 per barrel, and they've raised 10% this month and around 24% since July 1st. Now this escalation has a significant price impact in the realm of two derivatives. We've identified 5 key important crude derivatives that are key inputs in different sectors. So let's see how the prices are fared. The first one is aviation turbine fuel, which has seen a 24% price hike since July, with a monthly price increase by OMCs every month. ATFs are very commonly used in airlines as fuel and account for 40% of operating costs. At an average, airlines bulk buy their fuels for 6 months. And the last time crude traded about the $90 range, EBITDA margins for airlines like SpiceJet and Indigo declined declined by 20 and 7% respectively. In the last month, Jet Airways has fallen 22% and Indigo by 3%, while SpiceJet increased by 18%. Next is Carbon Black, which has surged 22.22% since July began. It plays a pivotal role in the tire manufacturing sector, serving as a crucial input for both rubber production and the tire manufacturing process. Rubber alone constitutes around 30% of the raw material expenses, and tire companies typically engage in a 6-month bulk purchase of raw materials. Additionally, Carbon Black also finds applications in plastics, pipes, wires, and cable manufacturing sectors. It's a mixed stock performance this month. The Polo Tires has seen a 6% rise, whereas Seat has suffered a 5% decline. Next, we have Pet Coke, which has seen a 8.31% price hike since July. The cement industry currently uses a 80% mix of Pet Coke as fuel to run the kiln, and as it has lower CO2 implications. Power and fuel account for nearly 30% of the total cost for cement companies, and firms bulk buy this for an average 6 months. When crude traded above the $90 range last fiscal, margins for companies like Shree Cements, Ramco Cements, and Ultratech Cement declined by 4%, 6%, and 7% respectively. Then we have titanium dioxide, which has a 2.82% price hike. It's a key raw material in the paint industry and uses white pigment. Paint companies bulk buy raw materials for a period of 3 months, and around 40% of the raw material costs in the paint industry come from crude derivatives. Derivatives like kerosene and phthalic anhydride have also increased 34 and 10% since July. The last time crude traded at this range, the EBITDA margins for paint companies declined in the range of 1.7 to 4% for companies like Berger Paints, Kansai Nerolac, and Asian Paints. And lastly, we have HDPE, which is high density polyethylene, which has nearly seen a 2% price hike. Now, HDPE is commonly used for packaging in the FMCG sector for food and beverage containers, and packaging accounts for around 15 to 20% of the total cost for FMCG companies. Whether packaging is in-house or outsourced by the companies, raw materials are bought on an average of 3 to 6 months. So to conclude, while companies do currently enjoy a cost or margin stability due to their bulk purchasing strategies, if the prices continue to rise, the subsequent increases in these and other crude derivatives could also pose challenges to the overall cost and margins in the latter part of this fiscal. However, the extent of this impact will be heavily influenced by purchasing practices and the time frames that are adopted by the respective companies.
All right, that makes a lot of sense. Thanks so much, Mihika, for joining in. And 3 to 6 months is what Mihika was pointing out for a variety of sectors. And I guess we will see the impact in both the next quarter, that is the December quarter, as well as the fourth quarter.
Absolutely. And clearly, the margin impact is something what we need to actually look at from this perspective as well, because clearly it's the higher cost that will, in fact, the last time I remember when I was talking to Mika as well, when we were looking at Berger Paints, the last time when crude was above these $90, $92, $94 in that kind of a range, Berger had already seen margins dip into single digits, right, from a double-digit margin. Yeah. So that kind of an impact is going to be interesting to watch out for all of these companies.
And interestingly, I think also from the perspective of FMCG companies, to the extent that they use certain derivatives of crude, it will be important to see whether they can pass on that in the pricing measures, which they haven't been able to do so far because consumption is a bit of a question mark. They have been speaking about that. HUL has gone on record to say consumption is a question mark in what they call Bharat, which is rural India. But then let's see how that pans out. For now, let's turn to individual stocks and see which ones are in the news. We've got a whole host of stocks to talk about. Let's start with Varsha, who's joining us to give us what is on her list. Morning, Varsha. What are you picking up?
So, Alex, we always hear gone in 4 hours, gone in 10 hours. So I'm starting off with one of the companies, that is Birla Estates, which is a wholly owned subsidiary of Century Textiles and Industries, has sold phase 1 of Birla Trimaya within 36 hours of its launch. Now, the 556 units booked account for approximately rupees 500 crore booking value. Birla Estates has entered into a joint venture agreement with MS Ramaya Realty LLP to develop this project. Now, the company aims for an estimated revenue potential of rupees 3,000 crore from the entire project. The next we have DCM Shriram, where a UPVC extrusion unit of Finista building system at Kota has installed 2 extrusion lines and 1 blending line, and the same has commenced operation on 26 September. Now, the said expansion will increase the annual production capacity of Finista UPVC profiles from 8,600 metric tons to 12,284 metric tons. Then we have Pratap Snacks, where GST authority conducted search and seizure operations at the company's Bangalore manufacturing unit. According to company, the operations of the aforesaid manufacturing unit were not impacted and continued as usual. Then we have Rajrandani Metal, where the company received orders of rupees 206 crores from 12 clients. Couple of names include KEI Industries Limited, which gave order of 83 crores. Then you have Orient Cables India Private Limited, the order of 25 crores, and Paramount Communication with the order of 23 crores. Now, the next company that I'm talking about is, now we hear many PE companies, try to exit once they achieve the target. So, well, the same can happen with Healthcare Global Enterprises, where the CVC Capital Partners is exploring selling its controlling stake in Indian cancer hospital chain, Healthcare Global Enterprises Limited. Now, this is according to Bloomberg. Now, the private equity firm is looking to identify buyers for its 60%, for its 60.4% in the company. CVC's stake is worth about 345 million US dollars, according to data compiled by Bloomberg. Now, considerations are at early stage, and there's no certainty that this deal will happen. Lastly, we have Suzlon Energy, where Dilip Sanghvi and Associates decided to terminate the amended and restated shareholders agreement that was signed in Feb 2020. With the termination of the agreement, the investors group nominee director on Suzlon board, Hiten Tembaria, has also resigned with effect from September 26. However, the wind turbine manufacturers has clarified that the termination of the agreement will not impact the company's operations. Suzlon promoters held 13.29% stake in the company as on August 14, while the Sanghvi family and corporate bodies held 12.72%. Also on Tuesday, CRISIL rating upgraded Suzlon's long-term and short-term debt facilities with a positive outlook.
Last one is interesting because you've seen a turnaround.
And the kind of run-up that you've seen on the stock is also pretty interesting to watch. Thanks, Varsha, for getting us the details. So watch out for these names, but a lot apart from this that continue to remain in focus in today's session. In fact, Rishi is standing by to give us more in terms of which are the other stocks he's tracking. Good morning, Rishi.
Good morning. So firstly, there's Adani Ports, which is announced that it is offering to buy back about $195 million of its bonds. So these bonds hit an all-time high with regards to their price since, and this is the most since, not an all-time high, sorry, this is the most since April. After the company said that it would be buying back at a price of $975 for every $1,000 of debt. Up till October 11th, and then the price would fall further to $965. Now, the purpose is to repay its near-term debt maturities, and this announcement also marks the second tender offer for its 2024 notes, and this is just in a few months. This stock may therefore react positively. Then we have Vedanta, where Moody's has downgraded Vedanta Resources to CAA2 from CAA1. And it has maintained a negative outlook on the company. This is particularly with regards to the key overhang with respect to the elevated risks that the company is facing with its debt restructuring progress. And it is also not making any significant progress on refinancing of its $1 billion worth of bonds that are going to be maturing in Jan 2024 as well as August 2024. The stock has been hitting the 52-week low for quite some time, so the stock may continue to react negatively after this news. And there's also Hindustan Zinc that you may need to look out for, which is a subsidiary of Vedanta. Then there's Shyam Metallics, which has said that it is going to make aluminium foil for lithium ion cell manufacturing. It has currently a capacity of 20,000 tons for aluminium foils. The company is exporting about 60% of its overall output. So, but this proportion may change because the company is looking to target the in-house manufacturing facility for lithium-ion cells that the government of India is pushing for. So the stock may react positively. Then there's REC and PNB, who have signed an MOU to co-finance projects worth 55,000 crores over a period of 3 years. This is particularly for funding infrastructure, logistics, as well as in the power sector. The PSUs have been rallying quite a bit over the past few weeks, and PNB in fact hit a 52-week high yesterday. So it may continue to set new highs today as well after this news. Then there's IndusInd Bank, which has announced a multi-year global partnership with the ICC, and this partnership will begin with the upcoming World Cup. The bank is looking to access to have access to both branding as well as content assets as the World Cup begins and for future editions of ICC's tournaments as well.
All right. Thanks so much, Rishi, for bringing us those details. Quite a few stocks, in fact, to pay attention to. Let's take a check also in the banking space, where we've got updates on credit card usage as well as credit card market share. That space, as you know, has in fact seen tremendous competition. Let's bring in Himansh to give you the latest there. Himansh, who's gaining ground?
So SBI Cards has been gaining ground, and sequentially as well as on a year-on-year basis. So all of this comes from analyst views on RBI releasing their monthly update on bank-wise ATM point of sale and credit card transactions. But these credit card transactions are the key focus here, where total merchant spending in August 23 crossed over 6 lakh crores. And the cards in force, which are essentially the active cards that are outstanding with customers, have crossed over 9 crores. And SBI Cards has again gained market share on a sequential basis by almost 60 basis points and now stands at 18.4%. American Express and smaller issuers have also gained market share in terms of spending. HDFC Bank and Axis Bank saw market share losses to the tune of almost 26 to 73 basis points respectively. The gradual loss in overall credit card spending is also due to a pickup in UPI peer to merchant, which is essentially where customers pay the merchant directly at the point of sale through a QR code transaction. Daily spending data from the RBI also suggests that marginal slowdown in September versus August on a sequential basis and on a year-on-year basis is due to a high base year last year, where much of the festive season was spread between September and October. Lastly, Morgan Stanley remains overweight on SBI Cards and maintains its target price for 1,115.
So SBI Cards will remain in focus. It's going to be interesting to see how the stock moves in trade today. But moving on, you've been tracking the primary markets also pretty closely. Whole host of them which will, close today, some open today, and some list today.
Right.
If you could give us a quick update on all of them.
Right. Generally, Wednesday has been the focal point of the week's action in primary markets. And today, Updater Services and JSW Infrastructure, both of their bids close in today. Updater Services, the subscription data looks as follows, where 16% of the offer is subscribed on day 2. Updater Services had a slow start with about, 6% on day 1. Retail investors are leading this subscription push with almost 68% of the reservation subscribed. JSW Infrastructure, the offer is subscribed almost over 2 times already as of day 2. And retail investors have subscribed by 4.5 times. Non-institutional investors have subscribed 3.7 times. So JSW Infrastructure's, one could say, it has perhaps overshadowed Updater Services because both of the issues have been up on the same time. But today we also have Valiant Laboratories, which is opening their issue today. The pharmaceutical and bulk drug manufacturing company, it mainly focuses on paracetamol and other APIs as well. The bid will be closing on October 3rd, and it's a fresh issue of 1.08 crore shares. The price band puts the overall fundraise at about 151.2 crores. And it has, as of yesterday, raised 45.6 crores from anchor investors, around 4 of them. And the proceeds of the issue are going to be used for organic expansion as well as funding the working capital requirements of the company. Lastly, it has a subsidiary, which is interesting to note, Valiant Advanced Sciences Private Limited, which is going to be undertaking this expansion practices. Coming on to the 2 listings today, we have Signature Global India, where the stock will be listed at the upper price band of 385 a piece, and then Sai Silks, which is going to be listed at an issue price of 222 today.
Right. So clearly a lot of action in the primary markets also to pay attention to. Thanks so much for bringing us those details, Himansh. And by the way, in case you want to read more on any of the new issues, there are copies called, or stories called, All You Need to Know, that you will be able to find on the website bqprime.com. That brings us to the end of this edition of Trade Talk. And of course, we've got action from the live markets lined up in just a few minutes. So do stay tuned for that. This is BQ Prime.